Title: Nvidia's Next Chapter, the AI Gold Rush and What's Powering Its Surge. Hey everyone, welcome back to PyUncut, where we break down the stories shaping your financial future. Today, we're diving into Nvidia, the undisputed king of the AI chip world, and exploring what's really driving its stock movement this week. From rising AI capital spending to geopolitical clarity on China chip sales, Nvidia's latest momentum is more than just another tech bounce. So let's unpack what's happening behind the numbers and what it means for investors like you. Segment 1, the market snapshot. After a sharp 4% sell-off on Tuesday, Nvidia's stock regained some ground on Wednesday, rising about 0.6% to $199.82 in early trading. The rebound came amid broader volatility in AI-exposed companies. Big bank executives have been cautioning that AI valuations might be getting stretched, and that's made investors nervous. But here's the twist. Even with those warnings, the flow of money into AI infrastructure is still accelerating. UBS analysts just raised their forecasts for global AI capital expenditures, that's the total money being spent on AI chips, servers, and data centers, to $423 billion for 2025 and $571 billion by 2026. That's up from previous estimates of $375 billion and $500 billion. So while Wall Street worries about valuation, the real economy of AI spending is booming faster than expected. Segment 2, the demand story. Let's be clear, Nvidia sits at the center of the storm. Its GPUs, graphic processing units, are the engines that train and run large AI models, from ChatGPT to autonomous vehicles. When AMD reported earnings earlier this week, their stock dropped 5% at first, but then it rebounded after executives said that demand for compute has never been greater. That phrase, demand for compute, is the whole story. Everything from generative AI models to robotics requires more and more computational horsepower. And NVIDIA's architecture, particularly its new Blackwell chips, is still considered the gold standard. So even if investors get jittery about valuations, the underlying demand curve for AI infrastructure continues to rise steeply. Segment 3, the AI CapEx explosion. Let's zoom in on those UBS numbers again because they're huge. UBS now expects $423 billion in AI infrastructure spending this year and $571 billion by 2026. That's a 35% jump in their projection in just a few months. And the reason is twofold. One, agentic AI, that's AI capable of autonomous decision-making and action. And two, physical AI, robots, drones, and autonomous vehicles that interact with the real world. Both of these require massive computational resources, and NVIDIA's chips are literally the engines that make them possible. As Mark Hafel, UBS Global Wealth Management's CIO, put it, the anticipated growth of agentic AI and physical AI should spur greater demand for AI compute. Translation: the next wave of AI is going to need far more chips, power, and infrastructure than what's already built. And that's why NVIDIA keeps expanding its partnerships. Not just with data center operators like Amazon and Microsoft, but also with car makers, robotic startups, and industrial automation firms. Every one of those sectors is starting to embed AI at scale. Segment 4, geopolitics and the China question. Another big factor moving NVIDIA stock this week, China policy clarity. The Air administration confirmed it has no plans to push for sales of NVIDIA's latest Blackwell AI chips to China. That statement came after President Donald Trump and Chinese leader Xi Jinping met in South Korea, and the topic didn't even come up. White House Press Secretary Caroline Leavitt said, "As for the most advanced NVIDIA Blackwell AI chip, that's not something we're interested in selling to China at this time." That might sound restrictive, but for markets, it's actually a relief. Why? Because clarity removes uncertainty. Investors hate guessing whether new restrictions are coming. Now they know. NVIDIA's cutting-edge chips are off limits to China, but the U.S. market and allied nations remain wide open. And that gives NVIDIA a clear, predictable environment to operate in, at least for now. Segment 5, reading between the lines. Now, let's step back. NVIDIA's short-term price move from a 4% drop to a small rebound is less about daily sentiment and more about long-term conviction. Here's what investors should really focus on. AI CapEx growth is outpacing expectations. Even conservative banks are revising numbers upward. Nvidia's leadership in GPU design remains unmatched. The Blackwell architecture offers roughly double the efficiency of the prior generation, giving it a performance moat. Competition is intensifying. AMD's MI300 chips and Intel's Gaudi 3 are credible alternatives, though still behind in ecosystem support. Valuation risk is real. Nvidia trades at high multiples, meaning it's priced for perfection. That means any slowdown in AI spending could hit the stock hard. But demand durability matters more. Every major AI model, from OpenAI to Meta's Llama and Google's Gemini, runs on Nvidia hardware today. Even if new players emerge, Nvidia's early lead and deep ecosystem lock-in give it a defensive moat few can challenge. Segment 6. The bigger picture. AI as a utility. Let's take this to the macro level. AI is no longer a hype cycle. It's becoming infrastructure. Just like electricity or the internet, it's something every company will eventually rely on. So when analysts talk about AI CapEx, think of it like the early 2000s telecom build-out or the 1950s electrification boom. Every dollar spent on GPUs, networking gear, and data center power plants is a down payment on that future. And Nvidia is effectively the pick-and-shovel supplier in this AI gold rush. Even if some AI startups fail, Nvidia still sells the shovels. That's what makes the company so unique. It's not betting on one model or one app, it's powering all of them. Segment 7. Risks and realities. Of course, no story is one-sided. Let's talk risk. Valuation fatigue. Nvidia's meteoric rise means investors expect perfection. Any earnings miss or delay in next-gen chips could trigger sharp pullbacks. Supply chain constraints. Even with record revenue, Nvidia depends heavily on TSMC for manufacturing. Any supply chain hiccup could limit shipments. Policy volatility. The current U.S.-China stance could change quickly with new political wins. Competition. AMD's MI300 chips and Intel's Gaudi 3 are credible alternatives, though still behind in ecosystem support. Energy bottlenecks. As data center power demand doubles every 3 years, electricity could become the next limiting factor. Still, the demand curve for compute keeps climbing, and Nvidia remains best positioned to capture that growth. Segment 8. The investor takeaway. So, what should investors take away from this week's developments? 1. Short-term volatility doesn't break the long-term thesis. Nvidia's 4% drop followed by a bounce is just noise in a much bigger trend. 2. AI spending growth keeps surprising to the upside. UBS's revision shows how rapidly this space is scaling. 3. Geopolitical clarity reduces headline risk. The US-China stance, for now, gives investors breathing room. 4. Watch the fundamentals, not just the hype. Revenue, margins, and data center buildouts matter far more than daily sentiment. At around $200 per share, Nvidia's valuation may seem stretched, but if AI infrastructure really grows to $500 billion a year, the company's earnings power could still have a long runway. Closing. To sum it up, Nvidia isn't just a stock, it's the pulse of the AI revolution. The latest market jitters are reminders that even the strongest names face turbulence. But beneath the volatility lies one undeniable fact. The world's hunger for compute power is only getting started. As investors, staying focused on fundamentals, not just momentum, will be key to navigating this next phase of the AI era. Thanks for tuning in to PyUncut. If you enjoyed this breakdown, don't forget to subscribe, share it with a friend, and check out our full AI investing reports on PyUncut.com. Until next time, stay curious, stay rational, and keep compounding your knowledge.